समझ नहीं आ रहा अपने सैलरी इंक्रीमेंट का क्या करूं।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स के एसआईपी का टॉप अप करा ले। दिस इज द राइट टाइम।
क्या? समझ में नहीं आया।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स का एसआईपी टॉपअप करा ले। दिस इज द राइट टाइम।
अब समझा।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to ThePrint. This is Bidisha and you're watching Economics. With the union budget just around the corner, agriculture is once again being discussed as a sector that needs protection, support, subsidies and safeguards. And that instinct is understandable. Agriculture feeds India after all. It employs nearly half of our workforce and it plays a critical role in managing food inflation. But if we only see agriculture as a welfare obligation or as an inflation control tool, we are missing something far bigger. Agriculture is not just a sector the government has to manage. It is one of India's most underused growth reforms. And crucially, it is also the cheapest growth reform available to the state. The warning signs that we are wasting this opportunity are already visible, quite literally, on our farms. When people talk about India's agricultural underperformance, they usually point to familiar explanations. Small land holdings, climate stress, too many people dependent on too little land. All of these factors matter. But they don't explain something important. Even in regions with irrigation, with market access, with policy attention, productivity growth has slowed. And that tells us the problem is not just structural. The deeper problem is simpler and more uncomfortable. Agricultural incentives have frozen in time. And when incentives stop evolving, growth doesn't collapse overnight. It degrades slowly, quietly, until biology steps in to make the damage visible. Nowhere is this clearer than in India's oilseed economy, particularly mustard. Mustard occupies roughly 9 to 10 million hectares. It sits at the center of India's push to reduce dependence on imported edible oils. Over the last few years, acreage expanded rapidly. Why? Because minimum support prices went up. And policy messaging around oilseed self-reliance became louder. Farmers responded rationally, they grew more mustard. And in many cases, they grew it repeatedly. But this expansion happened without matching improvements in procurement predictability, without strong incentives for crop rotation, and without enough agronomic support. So farmers did what the system rewarded. They intensified. And this is where the data makes the problem very clear. As you can see in this chart, mustard acreage remained broadly stable for years and then suddenly jumped sharply. In just 1 year, cultivated area expanded by over 20%. But look at what happened to the productivity. Yields barely moved. Despite a massive increase in land under mustard, per hectare output flattened out. In other words, incentives pushed farmers to grow more land, just not better crops. This is classic area-led growth, and it's a warning sign, not a success. And this is exactly when biological stress begins to surface. Across major mustard growing belts, reports of orobunch began to rise. Orobunch is a parasitic weed. It attaches itself to the roots of the mustard plant. It drains nutrients directly from the crop. Field studies show yield losses ranging from 20 to over 60% in affected plots. And once orobunch establishes itself, its seeds can remain in the soil for years. This raises long-term risk and long-term costs. This is not an agronomic footnote. It is exactly what happens when incentives reward repetition instead of resilience. Now, if you zoom out from mustard and look at Indian agriculture as a whole, you see the same pattern repeating. This second chart breaks down where agricultural growth is actually coming from. And the message here is striking. Earlier, productivity gains and crop diversification played a meaningful role in growth. But over time, their contribution has shrunk. What's driving growth now is overwhelmingly land expansion. In fact, diversification contributes the least. That tells us something very important. India's agricultural growth is becoming increasingly land-led and not efficiency-led. And that's not sustainable. Farmers are often described as risk-averse. In reality, they are responding rationally to the risks the policy system chooses to absorb and the risk it pushes onto them. Price risk is cushioned for a narrow set of crops, but biological risk, climate risk, and market risk are largely individualized. This is exactly where diversification remains rhetorically popular but economically fragile. Shifting from cereals into oilseeds, pulses, or higher value crops exposes farmers to price volatility, procurement uncertainty, and sudden policy reversals. Under those conditions, sticking with familiar crops or repeatedly planting a newly encouraged one becomes the safest option. The consequences don't stop at individual farms. Regions locked into monocultures experience declining returns, rising ecological stress, and growing fiscal costs for the state. Now, here's the part we don't talk about enough. India's most dynamic agricultural growth today is not coming from traditional cereals. It's coming from dairy, from poultry, from fisheries, from shrimp aquaculture, from high-value horticulture as well. These activities use relatively little land, yet they generate a growing share of agricultural value added. What distinguishes them is not subsidy intensity, it's incentive structure. Markets are clearer, private participation is deeper, and policy interference is less frequent. These sectors allow farmers to exit low productivity traps. They don't survive because of constant rescue. They grow because the system makes growth rational. So what should the union budget do differently? The real question is not how much more to spend on agriculture. It's what kind of behavior the system chooses to reward. First, predictability. Farmers don't need permanently high prices. They need the confidence that policy won't reverse abruptly when prices rise. Rule-based trade responses, transparent procurement thresholds, and clearly defined support windows is the need of the hour. Second, diversification must be treated as risk management, not moral advice. Crop rotation, mixed farming, oil seeds, protein crops, all of these require protection against biological and market risk. Extension systems, early warning mechanisms, agroeconomic research, this is not peripheral spending, this is growth infrastructure that we need. Third, priorities must shift away from managing surplus and towards enabling transition. Every rupee spent storing excess grain or compensating avoidable shocks is a rupee not spent on productivity or resilience. Agriculture is India's cheapest growth reform because it does not require new land. It does not require radical technology, and it does not require massive fiscal expansion. It requires letting incentives evolve and trusting farmers to respond. The warning signs are already visible in India's fields. Whether the budget reads them as a crisis or as an opportunity will determine how much growth agriculture can still deliver.